Hello, traders, and welcome to Price Plan Profit. This is Melissa, and today I want to talk to you about day trading and how to recognize if we're having a trending day or a choppy day, and how I'm going to adjust my game plan according to that. So, let's get started. Trend versus choppy day. Understanding market conditions for effective trading is very important. We need to learn to adjust our strategy for trend days and adapt our game plan for choppy days. One size does not fit all in trading. So, what is a trend day? Price moves with clear directional momentum. It occurs in both uptrends and downtrends. In uptrends, we form higher highs and higher lows, or in downtrends, lower highs and lower lows. It exhibits minimal pullbacks or deep retraces. What is a choppy day? Sideways movement with no clear direction. Price often returns to the daily open. Wicks on both sides of candles are common, and traps and fakeouts are very common. Choppy days are dangerous if you're trading with trend day expectations. The market doesn't pick a side, so we adapt by focusing on fast scalps and being open to trading both directions. It's important to identify the day type early. I Before the market ever opens, I have examined the overnight session range. I have identified potential trends or choppy behaviors. I've analyzed the initial market structure, and I've observed price action for early clues. In the first 30 minutes are key. Is price expanding or stalling? What's the pre-market range telling me? Have we been able to get above the top of the pre-market highs and build a base? Have we been able to get below pre-market lows and build resistance? These are clues to what kind of day it might be. After 30 minutes and prices chopping between pre-market liquidity levels, I will assume we're in for chop until proven otherwise. Here is my game plan for a trending day. I have a bias towards continuation of the trend. I want to avoid counter trend trading attempts. I want to use pullbacks for strategic entries if the day is trending to the upside, or use rips for strategic entries if the day is trending to the downside. I want to scale out on strength as price moves. When I sense a trending day forming, I will focus on pullbacks near key Fibonacci levels, the 9 EMA, or inside candle formations if it's a bullish trending day. If it's a bearish trending day, then I want to focus on rips to key Fibonacci levels, the EMA cloud, or inside and down candle formations. Execution is more forgiving here if we get the direction right. What is my game plan for choppy days? I want to avoid initiating new breakout trades. I want to use range highs and lows for reversal scalps and reduce position size and tighten my stop losses. In chop, I take trades at range extremes, not the middle. No chasing, smaller position size, and I'm out quick if my idea works or doesn't work. It is definitely better to be of the scalper mindset in these conditions. Let's look at a recent trending day on the ES. On this day, the market showed its hand pretty quickly that it was going to be a downtrending day. My first bias was to the downside because price was below the PMZ or pre-market zone. I had confirmation when the lower liquidity chop level was breached and then became resistance on retest. We were also making lower lows and lower highs. That told me that this was a downtrending day. Now, what about for a choppy day? Here is an example of a recent choppy day in the ES futures. My initial bias was to the downside when price got below the PMZ. But after 90 minutes of price doing nothing but chopping below the PMZ and this line in the sand, it was very obvious that my game plan needed to change to a scalper mindset. How does that work? I'm not interested in taking trades between the two different levels of chop. Rather, I need to be ready to short the market when price comes up to the resistance area, taking profits quickly at my support area, then going long at support, taking profits at resistance, back and forth, back and forth. Now, once price broke below this lower liquidity chop, this was an opportunity to go short or to stay short in the trade, and it would have paid nice profits to the downside here. But once price got back above this lower liquidity chop level and it again acted as support, we're back in a choppy day and the mindset remains to scalp quick profits. And of course, if a stop is hit, take that stop loss quickly. Whether it's a clean trend day or a frustrating chop fest, adapting your plan is what separates consistent traders from impulsive ones. So ask yourself, are you reacting or are you prepared? If this helped you shift your mindset or approach, hit that like button. Drop a comment with your biggest challenge in choppy markets. And don't forget to subscribe so you never miss a new video. And if you want to learn more about the PMZ and how I trade it, be sure and check out this video. And if you're tired of trading alone or want to see how I prep and trade in real time, click the link in the description to join me and my trading partner, Trendy John, in the Trendy Trading Room at Simpler Trading. I'll see you in the next video.